Welcome back to the Raw Selection Private Equity Podcast. On the podcast today is Seth Auld, VP Portfolio Management and Deal Origination at Compass Capital, a private equity firm located in Kansas. Seth gives us a unique perspective because he's both doing direct investing and fund-of-fund investing in his firm. So we're going to talk heavily around how you can increase your relationships with LPs and obviously attract more capital into your firm. Let's dive in. Seth, if you can give us a brief insight into you, please.
Yeah, Alex. Well, thanks for having me on today. A little background on myself. So grew up in Kansas City, started out, grew up in a small family business, kind of caught the entrepreneurial bug early in life. Like most boys in high school, started a lawn business and ended up, expanding that into a lot of different areas with landscaping and snow removal, and built that company up over 4 years and sold it when I was in college. And that was kind of my first experience in private equity. Went to school to get my finance degree thinking I was going to do something in public equities. And then 2008 hit halfway through. And, what's that saying? You have plans, but life has other plans for you. And so, was talking to a professor one night and trying to figure out what I was going to do. And he said, you've got an knack for business. You're good with people. Have you thought about private equity? And didn't know what private equity was at the time. And he ended up connecting me with a gentleman who had been very successful at Bain Capital. He was an alumni of our school, and that gentleman was generous enough, said, come up to Boston, spend a half day with me, and I'll teach you, what private equity is, how I got to where I am. And that really kind of set me on the road that I am today. So fast forward to today, went down banking, consulting route, worked for a small family office for a short period of time, and then really cut my teeth with a large global agribusiness company. It's a Fortune 500 company here in Kansas City, and worked underneath the C-level managers there, and just learned a lot from those guys building out the alternatives platform for that company. And did that for 5 or 6 years, and then had the opportunity to come over here to Compass. And so we're a single family office. And when I came over here, kind of the objective is to really build out the alternatives platform. So we developed an internal fund-to-fund strategy and co-investment strategy within that I oversee, as well as a direct strategy and joint venture strategy. And within the direct and joint venture strategy, I mainly focus on the service area. So we have one of our platforms is in the plumbing, HVAC, and electrical space, focused on residential services.
Okay, thank you for that insight. So what's one mistake do you see private equity firms or portfolio companies making, and what would you suggest to correct them?
Yeah, so kind of have a unique view on this just because, I sit and kind of oversee our fund of funds. So I work with a lot of general partners. We track about 400 different PE firms across the US and parts of Western Europe. So kind of putting on my LP hat, I think one of the biggest things that we see is, private equity is without question getting more and more competitive. And, we think that having more of a focus and really defining your niche is going to be extremely important going forward. So really determining what sectors, do you want to focus on, and building out your team with great operating partners, great industry relationships is super important. I think the day of, being a generalist private equity fund is kind of coming to an end. You're going to have to bring more than capital to the investments going forward. And so that would be one thing from kind of the LP side. I think putting on more of an operations hat, going into what I do on the direct side. There's a lot of different paths you could go down there, but I think the biggest one is, seeing people that get too transactional. And it's really hard to do. Most of us in this industry are, accounting or finance or some quantitative background, and we're all pressed for time. And I think sometimes that leads us not to take time to build relationships, not only with sellers, but the senior leaders of the management team within some of our portfolio companies. And I think that's a huge mistake. We can sit and build all the models and have the best plans, but if you don't have the right people to execute it and you haven't motivated those people in the right way, all those plans go out the window. So I think that's a really important piece, is take time to build relationships with people. And I know it can be difficult. I definitely struggle with it sometimes when I get busy, but I think you'll see it builds a lot of value, and not only from a personal perspective, but from a financial one as well.
Sorry to interrupt. Just a quick mention of a long-standing partnership with Grata. As you will probably know, the private equity scene is constantly evolving, and deal flow is moving now to proprietary and data-driven processes. Grata provides you with the data and information of over 7 million private companies. So if you're looking to improve your proprietary deal flow and improve the data access, then reach out to Grata today. Now back to the podcast.
There's a few questions on the back of that, but initially, kind of what's your approach on the relationship side? Because we can all be very transactional. We've all got incredibly busy inboxes that are filled full of actions, to-do lists, acquisitions are being reviewed, portfolio company performance, LPs need support, etc. Everyone's pulling for attention. How have you approached that kind of relationship build? What's your type of internal process that keeps you, bring you back to that kind of level of focus on that topic?
Yeah. Well, I think you've got to be genuine in it. Like I enjoy getting to know people, and hearing their backstories. And I think it's super interesting. If that's not you, you might have to take a different approach. I think, a book that is really good that everybody should read is How to Win Friends and Influence People. If you haven't read that, that's probably a good one to pick up. But, I just have a curiosity about people and their experiences and how they got to where they are. And, people like talking about themselves too. So ask them questions and you'll find common ground with people. And I think over time you'll start to build a unique relationship with that person, and then you'll get to know their strengths and their weaknesses and what motivates them. I think sometimes being in private equity, we think more money motivates the people to do things, and that's not always the case, as I've found firsthand. And so I think it's an important piece, and how you go about it's probably different for each person, but try to have a genuine interest in who that person is, what their experiences are, how they got to where they are, and I think you'll find the relationship kind of grows from there.
So looking at that, so you also mentioned around reword things. You also mentioned around the niche and the narrowing of that. Now, I'm a big believer of that kind of inch wide, mile deep type process.
Yeah.
What's your take on what some of the good firms are doing? Because one person's narrowing the niche maybe 7 different sectors, another one's maybe one sector, another one's maybe one sector that's within a very small sector. So what's your take on what you're seeing from your fund of fund type world that's your definition of how firms should narrow the niche?
Yeah, that's a good question. I would say that one of the big things is finding really good operating partners who've got deep industry expertise and where you want to play. And I think a lot of firms are heading that direction now. Some are doing it better than others. There's the window dressing that we see sometimes where you've got a big name, but not super involved. And then there's, the actual meat of it where you've got somebody that, is involved in the company day to day. They're not a advisor that shows up, once a month to a meeting. They're full-time with the business. And so that's one thing that we've really liked to see is, getting those industry experts, but having them, on the team full-time, engaged in the deal analysis and the execution. Yeah. Also making sure that those operating partners are involved in the process of building out the strategy. Sometimes we'll see, the management team, kind of the accounting finance folks are the investment folks are building out the strategy, and then they kind of hand it off to, the guy with the industry experience. And, we like to see more of the folks that it's a very collaborative process. And in fact, the industry expert is really leading the charge on that and what that looks like and how they plan to add value to the business. So I guess does that answer the question?
Yeah.
Sorry, I kind of lost my train of thought of where you're.
That's all right. We'll cut that bit out at the end of what you just said. So you mentioned transactional. You mentioned be less transactional. You mentioned narrowing that niche, utilizing operating partners, which we have a team here that places operating partners into private equity firms. So we know that's a big, buoyant and fast-growing area as it becomes more professionalized and they become more part of the deal team rather than the ugly sister as a little bit regarded as the moment, or just the name on the website that's actually just a consultant. What else are you seeing from the private equity firms that you're considering investing in or have invested in, without naming any names, that's being more appealing to LPs and attracting that capital over, others?
Yeah. Well, track record is one, and a track record within the space that they're operating. So, we like to see, sometimes they'll bring operating partners in, lower middle market PE firms that are bringing in operating partners that worked with, multi-billion-dollar companies. It's not as relevant. So, hey, even if they don't have the big brand name, just get somebody in that has a lot of, deep experience within the size of companies. Sector is obviously important, but make sure it's the right size, that they know how to operate a business, because there's no question, spending time in the, plumbing and HVAC space, you can take a GM of a $40 million company and put them in a, $3 million revenue company, and they're completely lost. They don't have the resources, and vice versa. So, thinking about that a little bit, I think is very important to us. I think the other thing is, making sure that the operating partners, are heavily invested within the fund. That's always a really important piece for us as we're going through kind of our analysis that not only are they, personally committed from a time perspective, but also financially committed to what they're doing. And so that's another big thing for us.
And from a LP perspective, how do private equity firms and managing partners, investor relations profiles, how do they better connect with people like yourself outside of the fundraising rounds, rather than just banging on your door and say, hey, we're doing another one. It's been 4 years, 5 years. Let's connect.
Yeah. Well, I think it's really important for GPs to build relationships with their LPs and their current fund. At the end of the day, some things that we look at are, what's your re-up rate? How many of your LPs from your prior fund are coming to your new fund? We love references, if we're coming into a new fund. And so, going back to that, don't be just transactional. I mean, we definitely have firms that it's like, hey, once the fund's closed, you maybe hear from them once a year, other than kind of the statements that you get. And, we've got others that are more about building that relationship. And, your current LPs are definitely your biggest marketing tool going into your next fund. And so I think that that's really important. What kind of going back to your question of like, okay, well, what if I'm a GP and I'm trying to get a hold of, family offices? First off, the direct outreach is usually not great. We've got a special inbox for those. We get anywhere from 4 to 7, I think right now is the average for this month, direct solicitations, and so per day. And so we have a constant feed of deal flow where we find a lot of our investments is through relationships that we have with other family offices, funds that we've seen, had a lot of success. We look at, we network with a lot of other fund-to-fund operators. It's a very collaborative, environment. And so we'll pull some of our best managers through those relationships. The direct outreach is really hard. Getting involved in conferences, I think is another good one. Trying to add value. If you've got a family that you're wanting to bring in, I always think offering co-investments is a great way to start the relationship. It's a little more enticing usually for the fund manager. In this case, our team here. So that's another, good way if you're having trouble getting into somebody to, provide value beyond just offering your next fund.
No, I appreciate that. That's valuable insight for private equity funds to make their fundraising more impressive. I'm yet to meet a private equity investor that has been expertly trained in securing and attracting top talent for their portfolio companies. Therefore, I've written a brand new book exactly on that topic. I've collated all of the information from my years in executive search and spoken to some of the top private equity investors and put this all into a brand new book. We're giving away the first 100 copies to anyone who joins the waiting list. Check out the show notes and get your name down for this brand new book. What's your take on getting a deal closed versus getting the right deal?
Yeah, sometimes I think folks can get really caught up in a deal that they've spent a lot of time on. They've built the relationships, they've done all that, and they get towards the end, and you get a bit of deal fatigue. You want to get the thing across the line, and you start to make some concessions. And, I always try to go back to, how did we originally underwrite this? What were our thoughts at that time? And really making sure that you aren't straying from the initial kind of plan. And so, one of the ways to do that is we take pretty documented memos from each of our investments. We track them over time. We go back and we review, what the original model was to make sure that we're not creeping into a direction to get a deal done. So we try to stay really cognizant of that. But I do see a lot of firms that, celebrate that close, and it's a good thing to celebrate those wins. You just have to make sure that, you remember the business that we're in. We're not brokers. We make money when the business makes money. And so, it's an important thing to keep in mind.
I think a lot of that comes down to deal flow. And I think a lot of that comes down to options and picking the best one. And the firms I see that make the best investments have the best amount of choices and have put a lot of investment in, putting a lot in the top of the hopper to then spit out the good ones at the bottom. It's when you're scratching around and you're having to force that because you need to deploy capital. Is that similar to what you would see?
Yeah, I think we try to keep a deal flow, because I always tell my guys, like, there's nothing worse. We have a pretty small team, and there's nothing worse than working on a deal and kind of putting everything you have into that deal and then having it disappear. And you're exactly right. I mean, that's one way that you can start to creep in a direction on a deal. So yeah, keeping a big pipeline, super important, and not getting overly invested in a single transaction.
Right. You mentioned how to win friends and influence them. Stephen Covey, or Stephen Covey, depending on how you pronounce his surname. What other influences? What do you read? What do you watch? What do you listen to? Do you recommend that others check out?
Yeah, so I've got two little ones, and between that and work, there's less time than I would like some at points. But Wall Street Journal's big one. St. Louis Fed releases. If you've ever looked at the Fred site, it's all the economic data that the Fed tracks. So that's another really great one that we use probably weekly, or I jump on and we'll go through weekly. I'm a really curious person, so I'll read a lot of different things from different science magazines, a lot of different trades magazines. I think are really important to keep up to date on some of those topics. Really enjoying the new AI craze and all that's going on there. But I keep it pretty broad, and the rest of my time is family and work.
Sounds like a good balance. And if anybody wishes to reach out, Seth, and hopefully not to your list of 4 to 7 cold outreaches on private equity firms a day, but how does anybody get in touch with you?
Yeah, so LinkedIn's probably best. So you can reach out to me, Seth Auld, AULD, and think I'm probably the only one on there with that name. So, yeah, happy to reach out and connect over LinkedIn.
Perfect. Well, thank you very much for joining us, Seth, giving us an insight into the world of fund of fund and the balance of investing you have on direct, which gives a bit of a unique perspective as you're doing kind of both, obviously investing as a fund of fund and direct with your own platforms as well. So thank you very much for sharing everything you have.
Thanks, Alex. I appreciate it.
And thank you very much to all of our listeners. If you haven't already done so, please do subscribe to the podcast, which comes out every single week. But till the next time, keep smashing it, and thank you very much for listening.